What is a landholder duty and why do we have it? Before the landholder duty provisions were brought in across the country, there were rules set up to avoid situations of individuals avoiding having to pay duty on land by having that land owned by either private companies or unit trusts. That has evolved over time to what we now know as landholder duties. Landholder duty applies where you acquire an interest, such as shares or units, in a company or unit trust scheme that has land holdings of a certain value. Now, those values change depending on which state you're in. For example, in Victoria, the land holdings need to be worth $1 million or more. So you've become aware that you might be subject to landholder duty and be asking yourself a question, well, what is a land holding? Land holdings are defined fairly broadly and pretty much includes most interests in land. It doesn't include, however, things like interests held by secured parties or mortgagees. This can create some complexities, and it's best to describe that by going through an example. Just say Company A owns a farm and they run a farming business. That land, being the farm, would be part of their land holding. Let's just say now on that farm, there are solar panels affixed to that farm. The solar panels as a fixture might be considered part of the land holding. Whether or not it is considered part of the land holding though, might also be dependent on who owns the solar panels. There can be some complexity though in situations where the owner of the fixture on the land is different to the owner of the underlying land. In situations such as Victoria, the Commissioner of State Revenue has the discretion to disregard fixtures on land where they're owned by someone else who's different to and not connected with the owner of the underlying land. In those situations, provided the fixture is not used in connection with the land, those fixtures might be disregarded for the purposes of considering what the land holding is. So going back to the farm example, if solar panels were owned by a separate entity and they were not used in connection with the land, then the land holding might be disregarded when it comes to the solar panels. However, if those solar panels were then used, for example, generating electricity to run the farm, they might still be considered as part of the land holdings of the farm landowner. Most disputes in the landholder duty space arise when you consider whether or not someone has made the relevant acquisition in a landholding entity. Landholder duty applies where someone acquires an interest in a landholding entity where the landholdings are over a certain value. So what we're looking at here is what constitutes the acquisition of that interest. Acquiring an interest or an acquisition in a landholding entity applies where you either acquire a significant interest in a landholder, or you acquire a further interest in a landholder, or you acquire a certain portion of economic benefits in a landholder. In the case of a private unit trust scheme, a significant acquisition is obtaining interest in 20% or more of the interest in that unit trust scheme. In the case of a private company, it is the acquisition of 50% or more of an interest in that company. And in the case of either a listed company or a public unit trust scheme, it is an interest of 90% or more in that. Where the complexity can lie when considering acquisitions is where either the aggregation rules apply or the economic entitlement rules apply. There are three types of aggregation rules. The first is where there are prior acquisitions made by the same person. So for example, if someone had previously acquired an interest in an entity and subsequently acquired a further interest in that entity, and collectively those interests can be aggregated and you're above the relevant thresholds I described earlier, then landholder duty might apply. But importantly, there might be situations where the previous acquisition was at a time where that entity was not a landholder, in which case the calculation of duty will be determined based on the time that that entity became a landholder. The second form of aggregation is where there are acquisitions made by associated persons. So for example, if someone only acquires 30% interest in a private company, but their partner acquires, say, 15% interest and their child acquires a further 15% interest, then those acquisitions can be aggregated, and in that case, they would be over 50%, which would be considered a significant interest in that landholder entity. Now, what associated persons are is quite broad. The legislation defines it widely, and it can include relatives or other entities such as companies, trusts or partnerships that those persons are involved in. The third type of aggregation involves associated transactions, and this is probably the most complex. Parties can find themselves falling foul of the associated transactions rule even where the underlying interest is below the relevant acquisition rule, but there are subsequent transfers which collectively breach the associated transactions rule. There are also other considerations to take into account in determining whether landholder duty applies. These involve where there are acquisitions made in respect of obtaining an economic interest, for example, in a landholder, or in situations where you exert control over the operational decisions of the landholder entity, either directly or indirectly. In these situations, there are time limits and there's also discretions available to the Commissioner of State Revenue in terms of how the duty might be applied in your circumstances. So it's best to get legal advice in terms of how they might apply to you. If a revenue authority says you're required to pay landholder duty, you should consider whether or not an exemption applies to you. There are a range of situations where exemptions or concessions to duty might be available. Firstly, if an exemption would have applied had you been transferred the land directly, then those exemptions might also apply in this situation. There are additional situations where exemptions might apply. Common examples include acquisitions made by registered trustees in bankruptcy, liquidators, administrators of deceased estates, and also a common one is where there's a pro rata increase in interest across unit holders or shareholders. The landholder provisions also provide concessions from duty in some circumstances. A common one is where it leads to an anomalous duty outcome. An example of this could be where the duty payable in a certain situation might be higher than what would be payable if there had been a direct transfer of land from the landholder to a person. If you consider that an exemption or a concession to landholder duty might apply to you, then the step would be to either explain to the Revenue Authority that an exemption applies during an investigation, or if the Revenue Authority has already made an assessment of landholder duty, considering whether to lodge an objection to claim the exemption or concession. In either of these situations, you can contact Aptum for advice.